Well, it seems with 10-year Treasury futures, we begin a week with a lot of mixed signals and begetting moderate and muted price action, as it were. Started off from the get-go with kind of muted price action on a blowout Eurozone retail sales, the largest increase in 6 months. We saw 10-year German bond yields go higher, and it looked like we followed suit. Also, some speech coming out of Europe. The ECB did increase their asset purchases last week by 10 billion euro. That was much more than expected. Also, Panetta, on the board of the ECB, was quoted as saying that Europe won't be back to its pre-pandemic norm anywhere soon before mid-2022. So we roll into the U.S. session. Looming supply is on everybody's mind. We had a $58 billion three-year auction. Actually, was solid with a 0.4 basis point stop through that really was good for the market. The $38 billion 10-year auction that came out at 1 o'clock Eastern tonight, that was uninspiring or middling, what some people would say no worse than feared. The tail was a little bit worse than expected, but did not do a whole lot to affect the price action. It's important to note that break-even inflation expectations were up moderately today. That considered slightly bearish for 10-year Treasury futures. But the big story really is tomorrow. When looking at CME CVOL, given the fact that tomorrow we have CPI, we have 5 Fed speakers, 3 auctions, including a $24 billion 30-year auction, it should be of no surprise that at-the-money vol and SKU are both up moderately today. When you look at the whole curve, the CVOL, 1-week basis, we're trading in a 99th percentile. On a 3-month basis, it's only the 50th percentile. When you look at options activity today in June, noticeable volume in the 130, 131 put, along with the 133 call.